As I've said earlier on, your balance for UIF, SARS UIF that we still owe to SARS in terms of UIF was given to you, which was 979. However, you need to subtract the contribution as well as deduction from the employee. So it will be 148 from the employee plus the 148 that was a contribution by the employer. Both of them were included in that 979 because when the employee was processed, he was processed as though he was still working for the company, but he's still, in this case, he is not working for the company. So both amounts must be excluded from what we owe SARS because we don't owe SARS those two amounts. The deduction, which was going to be paid on behalf of the employee, and the contribution that has been paid for the employee. Both of them must be excluded from that 979 because it's a liability. When it decreases on the debit side. The reason why I'm writing there salaries and wages and not separate accounts is because you were told that it will be included. All your contributions will be included in salaries and wages. If they were not included in salaries and wages, then I was going to have two separate accounts. One was going to be salaries and wages. The other one was going to be UIF contribution. But in this case, because they were both included under salaries and wages, I will include salaries and wages and add the two amounts, which is 148 plus 148. That will be 296. You'll be left with what we still owe to SARS. And we still owe SARS 683, which is in terms of UIF. When it comes to salaries and wages, we were given 240,000, which is incorrect because we need to reduce that by the net salary of the employee. We also need to reduce that by SARS pay as you earn. We also need to reduce that by UIF, SARS UIF, which is both the contribution and deduction, and that will give you the 296. The expense when it comes to salaries and wages will be the balancing figure, which will be taken straight to profit or loss. That will be 211,852. In the statement of profit or loss, we are going to take our salaries and wages amount of 240 minus the gross salary of the employee and minus the contribution that we made to the UIF, and that will be 148. You'll be left with 211,852. That will be all we have in terms of salaries, operating expenses, that is. In trade and other payable, creditors for salaries of 25,100 need to be reduced by 20,000. You'll be left with 5,100 that you still owe to your employees. The unemployment insurance fund will be reduced by the two amounts, which relates to UIF. The deduction from the employee salary as well as the contribution, which is 148, and you'll be left with 683. Even if you wrote here SARS, UIF in brackets, you'll still be correct. Here I have SARS and then pay as you earn. Take the 12,050, you minus pay as you earn that related to this employee that was very nicely included in our records, and that will be 7,852. You'll be left with 4,198. In total, for trading our payables, we've got 9,981. All right, try this, but only prepare your statement of profit or loss, i.e. the income statement, as well as trade and other payables. Pause it for 10 minutes and press play to check the next part of this video, which will be solutions. I hope you tried it on your own. Let's see what we given here. It's very limited, and they say pre-adjustment trial balance. And creditors for salaries is 50,000, salaries and wages will be 300,000. They said creditors for salaries figure of 50,000 in the pre-adjustment trial balance reflected the following two situations. The salary clerk had incorrectly processed the December salary of employee Timuloi, who resigned from the company on the 30th of November. Remember, our financial year end is the 31st of December. This person resigned on the 30th of November, which is the previous month, the month before the month of the year end. Now, the details of this December salary are as follows. It's 40,000, pay as you earn, it's 8,500. You've got pension, which they told you is 10% of gross salary. We've got medical age, which is 3,000, UIF, which is 177. For contributions, they told you that the company contributes 1.5 for every 1 rand contributed by the employee. So first we need to find out how much the employee contributed. By taking the 40,000, multiplying it by 10%, it will give you 4,000. So the employee contributed 4,000 towards the pension, meaning that we as the company will contribute 1.5 of that. When you multiply 4,000 by 1.5, it will give you 6,000. So if the employee contributes 4,000, we will contribute 6,000. Okay. Medical aid, they said the employee contributed 3,000, which was what is deducted from the employee's salary. We are going to contribute 2/3 of the amount contributed by the employee. So when you find 3,000, you will multiply it by 2, divide it by 3, it'll give you 2,000. That is the 2/3 of 3,000. So if the employee contributed 3,000, we will contribute 2,000. And for UIF, whatever they contribute, we will also contribute. All right. Moving right along. And then they told you that contributions are debited to salaries and wages, meaning that we will not have a separate account which relates to pension fund contribution, medical aid fund contribution, UIF contribution. No, all of them are included under salaries and wages, which is one account. And then they said the remaining salary was for an employee who required his December salary to be paid in January. I think that is supposed to be January 2023. Or 2022. It's actually correct. Now, when we record this, and then they told you that payments to SARS and other various funds will be made on the 1st of January 2022, which is the next financial year. So we know that everything that needs to be, all the payments that need to be made to the separate or different funds were only made in Jan. For the current financial year, they remain as current liabilities. From your salaries, you will first subtract the gross salary of the employee, then subtract what we contributed in terms of pension, then subtract what we contributed in terms of medical aid, then subtract what we contributed in terms of UIF, and then your net salary, your actual salaries and wages expense will be 251,823. That is your expense. For creditors, we are going to subtract the net salary of this employee, which was, when you take 40,000, you minus I'm simply minusing all my deductions. You minus 8,500, and then you minus 40,000 times 10%, and then you minus 3,000, then you subtract 177. It'll give you the employee salary of 24,323. That 24,323 must be subtracted from their net salary. So you'll be left with 25,677. From pension fund, you minus what we contributed as well as what was deducted from the employee. Remember, what was deducted from the employee's salary was 4,000, and then we minus what we contributed, which is 6,000. and that will give you 2,000. For medical aid, we minus 3,000 that was deducted from the employee that we needed to pay for medical aid. We don't have to pay it anymore because that was a mistake. So we need to exclude it because we recorded it as though we owe it to the medical aid fund, but we don't owe it because that employee is no longer an employee of the company. And then we minus what we contributed in terms of medical aid, which was 2,000. You will be left with 8,400. Pay as you earn, you do the same thing. You minus the 8.5. When it comes to pay as you earn, you don't contribute anything. That's why you're just minusing what the employee contributed. And then when it comes to unemployment insurance fund, you minus the 177 that was contributed by the employee. And then you minus 177 that we as the company contributed. And when it comes to UIF, we will be left with 846. When you add all of that, it will give you 43,423. All right, that's it when it comes to salaries and wages. In the next video, we will be doing other adjustments. Please don't forget to subscribe. That's all.